let's get to the fresh stuff. Why don't we start with Yelp? So Yelp is important in the sense that it's probably one of the top 10 momentum names, and like all the momentum names, had this pretty big sell-off in the last 6 weeks. And the thing that, I started talking about this way back when Tesla, the first time Tesla topped out at 190, and came off 40%. And I made the comment that before it's all said and done, the majority or a large part of these momentum names will have these 40% pullbacks before kind of basing and then resuming their climbs. Now, in a bull market, when momentum names get crushed, you'll see pullbacks in the 30 to 50% area, 40 being the number that I kind of like to use. And then people start to come back in and they're skeptical and everyone thinks they're going to go to zero and they start to rally back. And that's what happens in a bull market. In a bear market, what happens is they end up just going down 80 or 90% and they just keep going. But I don't think that's the market that we're in. And so when we zoom in, we start to look for kind of things that relate to a bottoming process. And so when something like Yelp puts in its low at 52.5 a couple of days ago and rallies back, and then the numbers come out and they crush it down, and there's people waiting to buy basically about a point above the recent low, and they push it right back up through the prior couple of days resistance, and then you come in the next morning and it's higher, you say, okay, that's something, that's a higher low. It's kind of like Netflix kind of puts in the low, 300, shows all that weakness in the middle of the day, comes all the way back down, but stops at a higher price, closes higher. And these things are what they're doing is they're kind of building their case for a bottoming process. And as short-term traders, we want to pay close attention to this because our edge is we have the ability to get in and out quickly and kind of get in at turns, whether they be tops or bottoms for stocks, because we're not getting into the 100,000 shares or these sizes that gives you the inability to not trade around. So that's my bigger picture point. Now we'll move into more of the micro level to trading Yelp for today. And just further, you want to look at the other momentum names too. Recent lows, are they starting to hold higher? Are they starting to move through pivot highs where they failed recently as well? And we'll look over the next few weeks, do they start to build that case? Doesn't mean they're going to go back up to their highs anytime soon, they're not. But what they can do is move to significantly higher prices. And I don't think you've probably heard me talk about in this way in the last couple of months where we looked to short everything into pops, and I made a lot of videos on that, and that's kind of was the market. But now we look for the other case, especially as more and more people have become bearish and capitulated, and hedge funds have gotten killed the last month or so, from what I've heard from friends. So the one thing we do have to be able to look at for is hedge fund liquidation still. If individual funds that have these positions start to liquidate, you could get those quick intraday down moves, which might create buying opportunities like what we saw in Triple D 2 days ago. So looking at Yelp, the initial move took it out to top out at 62, pulled back to 60. It drifted up in the after hours to around 61 and change. We come in this morning. Obviously, it's higher than the after hours high. We look at that as being bullish, and we want to use this kind of level on the open. It's the after hours high, which was 61.85-ish or so. So we want to see if we can get a pullback into that area here. And what we see when we get a pullback, even if it goes through that level, what we want to see very quickly within 10 minutes or so, it moving back above that level, and then probably we want to see it above 63. And then we'd look for a move back up to the pre-market high, to 65 or so, which is frothy. It's, it's 11 points off the after hours low, but if we step back to the 30-minute, we know that we have kind of this 66 seems to be a really good possible failure area right here, right? So what happened was it bottomed below $60, it rallied back up, it was having trouble for a few days around 66, broke through, got as high almost to $70, and then came back down below the 66, and then it back above it, you can see the next day. came off 5 points hard right on the open from that 66. So right now we're at 63.80, about $2 away from that 66 level. That's the spot where, you know, if you wanted to short this thing, that's a spot on the open you would think that it would pull back from a couple of points at least. And we'll see where it finishes at the end of the day.